Hello, welcome to Job Order Costing, a walkthrough through T accounts. This is Bennett Tchaikovsky. Disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2019 by Bennett Tchaikovsky. I encourage you to share this presentation and share links to this presentation on an unmodified basis. If you modify the presentation in any way, please email me prior to doing so at bennett1812@gmail.com to discuss. Note the author does not claim any copyright whatsoever in any companies or organizations mentioned in this presentation. Rather, the other parties are the owners of their respective copyrights. So I've made another video on job order costing, but I kind of had an epiphany. And the epiphany is that by just me talking over a couple of slides, it's really not doing a lot of good. Rather, I think what's better is to kind of show you job order costing through the various different T accounts. Now, first, what exactly is job order costing? What we're doing here is we're looking at costing methods because we are a manufacturer. When we are a manufacturer, we have raw materials, we have direct labor, and we have factory overhead. And if we look at job order costing, process costing, even activity-based costing, what we're really trying to go through and do is how are we going through and allocating these various different jobs into the various costs, and how can we better track our costs to make better business decisions. So what I'd like to do now is I'm going to quickly pause and go to my T-chart. So if I look here at job order costing, really what this is in terms of T accounts, and if you want to go back and look through what exactly is a T account, how does it work, it's the L+OE, or my assets will typically have debit balances. And so when we're looking at this T account, and the very first part in terms of going through and looking at, say, our earlier chapters where we just had raw materials, we had work in process and finished goods. Job order costing is different because we're making everything for the customer. I need to keep track of my customer separately because I am essentially doing things on a custom basis. I might be a construction contractor where I might have with one client, I might have several different jobs going on, or I may have several different clients. But the important thing to remember is that when we're doing job order costing, we need to keep track of everything separately. So how does things usually work in terms of, with T accounts? And let's remember a few things from our last lesson. The way things are working is things are starting at raw materials inventory. We're going to put those into the work in process accounts. We're going to add in some direct labor, and then we're going to add in some overhead. Next, what we're going to do is that once we've done that, we're then going to go ahead over here, and then if a job has been finished and sold, it's going to go to finished goods inventory. If it's finished but unsold, if a job has been finished and sold, it will first go to finished goods inventory and then go to cost of goods sold. If it's finished and sold, then over here, it's going to just stay in finished goods inventory. Remember, at the end of the period, whatever's remaining in the work in process has to be the work in process. So let's take a look at this here from a purely theoretical perspective. So when I look at my raw materials inventory, I have my beginning balance, which will always be here as a debit. And so all of you can kind of see how I like to do accounting with T accounts. I've got my assets are equal to my liabilities plus owner's equity. And then I've got debit, credit, and then I can even take this a little bit further. Expense, revenue. So over here, when I'm going through and I'm recording financial transactions, If I have an asset account like inventory, it's typically going to have a debit balance. It's going to be increased with debits and then decreased with credits. If I have an expense account, that's typically going to be recorded with debits. And then over here, if I have a revenue account, I'm going to be recording it with credits. Similarly, liabilities and owner's equity have credit balances. They're increased with credits and then decreased with debits. So here, if I have my raw materials inventory, I'm going to have a beginning balance in that. And then any kind of raw materials purchases is going to go over here as a debit to my raw materials inventory. Now, what exactly comes out of raw materials inventory? What it's going to be is going to be the materials that I'm directly placing into production and indirect materials that I'm then putting into factory overhead. So here are my direct materials. So let's call this DM. So we'll call this DM job WIP 1. What is WIP? WIP is orange WIP. No, WIP is work in process. So then this WIP, basically, I'm going to send it out, I'm going to apply it to the job, and this is where it's going to come from. So essentially, when I use raw materials in production, I reduce my raw materials account with a credit, and I'm going to send it over here to the work in process account. So again, for every debit, for every credit, I need a debit. Similarly here, direct materials will be going here to work in process 2, direct materials to work in process 3, direct materials to work in process 4. So over here, work in process 2, direct materials, work in process 3, direct materials, work in process 4, direct materials. So I've got all those balances going in there. Now, what else can come out of raw materials inventory? Now, sometimes if I'm using raw materials, but I can't trace it directly to a job, direct materials, what I'm going to do is those where I still might be using materials, but I can't isolate it to one job. So what this is going to be called are indirect materials. Okay, where exactly do indirect materials go? When we go to factory overhead, I put it under my actual factory overhead because this is the amount of materials I actually used. So in terms of indirect materials. So I've got my raw materials inventory, and if I've got 100 different work in process accounts, this is gonna be 100 different entries all right over here. So I've got my direct materials, WIP 1, WIP 2, WIP 3, WIP 4. And on this other side, I've got my beginning balance plus my raw materials purchases. And I can add that up there. Thank you, Kat, right over here. So here I've got my raw materials purchases, my beginning balance, plus my raw materials purchases, minus these guys over here. This is going to give me my ending raw materials inventory. Okay, so there we go. That's the first part. So the 3 different things that go into a work in process account every time are going to be, or maybe the 4 are going to be beginning, work in process 1. We have my direct materials. Now what's the next thing? It's going to be direct labor. Now, direct labor, where does that come from? Well, direct labor comes from factory payroll. So my total payroll is generally going to be an expense. I would be doing something along the lines of debiting salaries and wages expense or factory payroll, crediting cash. But here I'm just going to call this my total factory payroll. And this is usually going to be an expense. But here, because it's part of the inventory, we're going to be capitalizing it. But just let's put out this total factory payroll over here for now. Now, what comes out of this total factory payroll? Well, what comes out of my total factory payroll are my direct labor to work in process 1, direct labor to work in process 2, direct labor to work in process 3, and then direct labor to work in process 4. So I'm going to apply that factory payroll to the various different T accounts using this. I'll just essentially credit this out. So this is going to come here from the factory payroll. And oh, Tchaikovsky, good job. I got to make some more room. Okay, there we go. So then I'm over here. I'm going to have work in process. No, I actually didn't have to do that. Good job, Tchaikovsky. Okay. So I've got my direct materials work in process 2, direct labor work in process 2, direct materials work in process 3, and then my direct labor. And then lastly, with WIP 4, my direct labor WIP 4. I'm also going to have here my work in process accounts beginning, WIP 2. These might be 0, by the way. It just depends on the problem you get. And then over here, I'm going to have my beginning WIP 4. So far I have these on my beginning balance, if there is one, my direct materials, my direct labor. And again, the reason why I'm doing this is it's really important to understand where these different accounts come from. At the end of the day, when I'm showing my inventory on my balance sheet, I'm only going to have raw materials, work in process, and finished goods. The factory overhead and the factory payroll ultimately have to go to 0. So let's look at here at factory payroll. Now, typically what I would have here is, as I'm looking at this, I'd say, okay, I've got my factory payroll, and then I've got my direct labor that went to each one of these jobs. But similar to raw materials inventory, what I can also have is indirect labor. What is indirect labor? It could be a factory supervisor who's supervising all the different jobs. And so we can't call it direct labor because he has different things happening here. So what we're going to call this is indirect labor. Okay. Now, if I'm crediting indirect labor here, where is that going to debit to? And this is going to go over here to my factory overhead under actual because it's an actual cost. Okay, so my factory payroll at this point in time should be 0 because the total factory payroll minus the direct labor minus the indirect labor ultimately should give me here, take me down to a 0 balance. So my total factory payroll, actually there's probably a better way I can write this. Let's see here. So I got total factory payroll. And then over here, if I call this A, B, C, D, E, sum of A through E. Let's call this A plus B plus C plus D plus E. So this is right here is going to give me 0. Factory payroll and factory overhead have to be 0. Okay, so now let's go back up here. And the next thing we need to do is the last element over here is going to be factory overhead. Now, as I've said in prior videos when I've been going through and discussing job order costing, when we're dealing with job order costing, oftentimes I'm not going to know what this actual factory overhead is until later in the year. And so what might be happening here is this might be something like factory rent, factory insurance. You can also have things like factory property taxes. Let's see here. Factory property taxes. The whole point is that a lot of times I'm just not going to have time to go through and actualize these. So instead what I'm going to do is I'm going to apply overhead. So up here, so FOH, factory overhead. So what I'm going to do is I'm going to apply factory overhead over here, and this might be something on the basis of direct labor cost. So here, if the applied, if we said here that it said that factory overhead is applied basically using, we'll say 60% of direct labor cost, then over here what I would do is I would be applying overhead, a factory overhead for WIP 2, and this here would be 60% times the direct labor for WIP 2, which is right there above. So that's kind of what we're trying to go through and do for these ones. Now, when I apply factory overhead, and so over here, I'm going to have applied factory overhead WIP 1, and this would also be 60% of the direct labor cost or whatever that factor is. It might be based on materials. Here, then I'm going to have my applied factory overhead WIP 3, and then over here, I'm going to have my applied factory overhead WIP 4. So where are all these coming from? These are right over here coming from the applied. So I have this over here. So again, in the earlier chapters when we were going through and looking at this, we would know the factory overhead exactly, but here we don't know. We have to estimate it. We can estimate it on a variety of different ways. In this case right here, I'm assuming essentially this 60%, just coming up with something. It doesn't have to necessarily be 60%. So what I'm going to do now is, once I've done this part here, is I'm going to go through and I'm going to be totaling these up. So my total WIP 1, total WIP 3, this is going to be my total WIP 2, and this is going to be my total WIP 4. Now, at this point in time, I've done all of this part. Now, the next thing that I would have to go through and do is to figure out, well, where do these different balances go? And this is where the problem needs to tell me some additional information. So for fun, let's say that work in process 1 was still in process at the end of the month. WIP 2 was finished but unsold. WIP 3 was finished and sold. WIP 4 was still in process at the end of the month. So as I look at this right here, what I'm doing now at this stage is I'm saying to myself, okay, so what exactly is happening with these various different balances? Can they still stay in work in process? And the answer here is, well, my work in process was still in process here at the end of the month, so I can't move this anywhere. Work in process 2 was finished, but it was unsold. So it was finished, but it was unsold. So what I need to do is I'm going to take this total work WIP 2, and I'm going to move this over here to my finished goods inventory, because over here it is finished, but it is unsold. When I go through and do this, my ending balance in my work WIP 2 account should now be 0. Over here, it tells me my WIP 3 was finished and it was sold. Okay, so if a product is finished or a job is finished but it's unsold, then it's going to leave work in process and sit in finished goods until it is sold. But here, work in process 3 first needs to go to my finished goods inventory. This now has a balance of 0. Now, when it comes over here to my finished goods inventory, what happens at this point in time is I say to myself, okay, my total finished goods is WIP 1, or basically here is WIP 2 and WIP 3. But my problem is I'm not done yet. Why am I not done yet? Because over here, I've sold this WIP 3. So this WIP 3 then has to leave finished goods inventory, and it takes the final journey into cost of goods sold. So over here, my ending balance in my finished goods inventory should essentially just be my total of work in process 2. And then over here, in terms of my cost of goods sold, the ending balance should just be the total work in process 3. So as we see over here, what we're doing is with this additional information, we're going through and we're kind of saying to ourselves, you know, hey, work in process 1, it was in process at the end of the month, as well as 4. So those are going to stay in WIP. Work in process 2 is finished, but it was unsold. So that's going to be in finished goods inventory. And work in process 3, work in process 3 was finished, but we had not yet sold it. Work in process 3 was actually finished and we sold it. So I've got to take that to cost of goods sold. Okay, so that's kind of where the flow of inventory is going, but we have an issue here. And the last issue here is, well, what did we say about this factory overhead account? This factory overhead account has to be 0. So right over here, what I would be doing is I would be going through and listing out all of my actual factory overhead expenses. As we said, it was indirect materials, indirect labor, factory rent, factory insurance, factory property taxes. You could also have factory maintenance, factory equipment, depreciation. And so this is giving me my total actual factory overhead. And over here is going to be my total applied factory overhead. Total applied factory overhead. Okay, so we've done that, and now we have these 2 different parts here. So if I have if my actual factory overhead is greater than my applied factory overhead, then I have under applied factory overhead. Okay, so what exactly does this mean? So in this case right here, if my actual factory overhead is greater than my applied factory overhead, then I have under applied factory overhead. I didn't apply enough. So here, if my actual overhead is greater than my applied overhead, I have under applied my overhead. And over here, if the applied overhead is greater than the actual overhead, I have over applied factory overhead. So what do I do here? As I said, this balance needs to be a 0. So let's go through each of these different types of situations. So if I have a factory overhead account, if my actual factory overhead, say, was 100,000, my applied was 95,000, then my ending balance in my factory overhead account is going to be over here. It is going to be $5,000. Okay, so here it is under applied because I should have applied 100,000, but I didn't apply enough. So here my factory overhead is under applied. And therefore what I need to do is I need to do a journal entry to make this 0. So if I'm making a journal entry to make this account 0, what I'm going to do is I'm going to say, okay, what is my journal entry going to be? If I have a $5,000 debit balance, how do I make this 0? I'm going to credit factory overhead for $5,000. This will make it 0. So let's do this as a journal entry. So here I'm going to credit factory overhead for $5,000. And then here, the account that I'm going to be debiting is going to be cost of goods sold. Now I'm going to put a little star by that, because if it basically for here, for cost of goods sold, that really kind of depends. And this, my description would be, is to adjust for under applied factory overhead. Now, if I do the other side of this, and I say over here, my factory overhead, say that this, the actual amount is 188,000 and my applied was 200,000, then in this case right here, I have an ending balance of 12,000. So so in this case here, the factory overhead is over applied. Why do I know? The applied is greater than the actual. So I need to make factory overhead 0. So this here is going to be a $12,000 debit. So in this scenario, what's a little bit different is that over here, this is going to be factory overhead for 12,000. And this here is going to be cost of goods sold for 12,000. So if I go over here, and this is my description here, would be to adjust for over applied factory overhead. So when I go over here to my T accounts, and I go to cost of goods sold, any kind of under applied factory overhead will go here, and any type of over applied factory overhead will go here. And that will get me to my ultimate ending cost of goods sold. Now, the one thing about this here, and the reason why I put an asterisk by this, is that what if the amount of this was in fact material, meaning that it's a large enough amount, the overhead over here is significant enough where it would really make a difference with an investor or to internally. In that case, what I would do is I would apply overhead. Okay, so the last type of scenario we can have in terms of looking at over or under applied overhead is what happens if the amount is significant. If the amount is insignificant, I'm just going to put the difference to cost of goods sold. However, if the amount of the over or under applied overhead is significant, I need to allocate it to the accounts where factory overhead was applied, or cost of goods sold, work in process, finished goods inventory, and just basic cost of goods sold, finished goods inventory, and work in process. I do not apply it to raw materials inventory. And the reason is because over here, this has no factory overhead applied. This is just raw materials, is just directly going into the work in process account and part of to the factory overhead, the actual amount. So if I have a situation, and we'll just make this a little bit more extreme, if my actual amount of factory overhead was 25,000 and my applied amount was 10,000, if my ending balance here is roughly 15,000, if I just took 15,000 directly to cost of goods sold, this would be moving this 30,000 to 15,000. Why does this go up? I have to credit factory overhead here to make it 0, and I'm going to be debiting cost of goods sold, which is an expense. So my balance will go to 45. So in this case right here, what I need to do is to apply this 15,000 on a pro-rata basis between cost of goods sold, finished goods inventory, and work in process. I'm doing this because the factory overhead started in WIP, or at least the applied overhead went to finished goods, and then ultimately to cost of goods sold. So here what I need to do is to come up with, okay, so for my cost of goods sold, finished goods inventory, and work in process, which these made up balances are 30,000, 20,000, and 5,000. What is my percentage of the total for each? So here, what I'm going to do, so my total amount here is going to be 55,000. As a percentage, if I take 30,000 divided by 55, I'd get 0.54545. Here it's 0.3636, and here it's 0.09. So, and how did I get these amounts? I took 30,000 and divided by 55,000. Thank you, Kat. Here I've got 20,000 divided by 55,000. Here I've got 5,000 divided by 55,000. When I add up these amounts, so this is my percentage total, and we'll call this letter A1 for some steak sauce. And so right here, if I take here the percentage of the total and I multiply this by the over, which is the underapplied factory overhead, and this here amount is going to be 15,000. What I'm going to end up doing here for my journal entry is I'm not just going to take it all to cost of goods sold. Rather, what I'm going to do here is take this underapplied factory overhead and apply it to these different accounts. So here, I'm going to credit factory overhead. So I still need to credit factory overhead for 15,000, right? And this is what I need to do here to make this account 0. So here I'm crediting factory overhead for 15,000. But unlike in these examples here, instead of just taking it and putting it to cost of goods sold, what I'm now going to do is I'm going to take the percentage of the total multiplied by that 15,000. I'm going to apply it to these different accounts. So here, cost of goods sold, finished goods, and work in process will each see adjustments of 8182, 5455, and 1364. So what I end up doing, instead of just debiting cost of goods sold, I debit cost of goods sold, I debit finished goods inventory, and I debit work in process. If this was flipped around, meaning that I had an applied greater than my actual, the journal entry would just reverse. So again, the biggest rub here is that, you know, when it comes to the under or over applied factory overhead, generally I just take it to cost of goods sold. However, if the amount is materially significant, right, and this could be, I'm distorting cost of goods sold. If I put the 15,000 in here, I'm really overstating it by a pretty significant amount. So what I want to do instead is I want to go through and I want to allocate the under-applied factory overhead to those accounts where factory overhead was included. Note, I do not include raw materials inventory because that was not in one of my accounts. So thank you for watching me here today with a journal or with a T account walkthrough for job order costing. Please don't forget to like and subscribe, and I look forward to seeing you on the next video. Thanks so much.